All right, so Kip, sorry. I had put together a different type of presentation for this, working on a longer one when things get settled, but this is just was a quick review. For those, if I knew someone, a new investor, someone new might have asked what happened with this, what was going on with this, and of course, I'm probably the only options or trading educator that didn't put up a video, didn't put up a blog about this because there was so much about it. It's just, copying what everyone else has already done, essentially. Anyway, long story short, we saw a different type of short squeeze, of course, with what was going on. We all saw and read about it. Sam even traded it, and he says position sizing is key on the side of that as well. But here we go. It was January 11th, it was at 1995. It's at $20 a share. It goes up to 31 on January 13th, 43 on the 21st, 65 on the 22nd, 77 on Monday, 147 on Tuesday, 347 on Wednesday, and then Thursday, things happened. Okay, and this was all related to those large short, we know what they were, so large short sell positions by hedge funders. On Thursday, Robinhood, Webull, and others halted new purchases of the stock around 9:45, 10 a.m. As Sam mentioned, he had some problems even with other brokers as well. You could still sell your position after that run up to 340. And so you see what happened here. I point out Thursday at 10 a.m. It had opened and gapped back up to around the 400 level, 420, 430. I think Sam said he got out at 406. Or that was today, maybe, Sam. That was today you got out at 406. But you see what happened right there. It jumped back down to 250 because there was no pressure to push it up. No one could, the people who wanted to buy even single shares, 2 shares, or 5 shares couldn't. The people who were doing this couldn't buy it. And some people started talking about oversight investigations. The CEOs of both Webull and defended it. The gentleman from Webull, I saw a video with him. He said it was too expensive to get the shares from the clearing houses because they increased the margins of what it would cost because Webull has to go out and get those shares. And technically, when you buy shares, you don't clear the fund. You're not actually paying for them. It clears in 2 days. There's a little different talk of why they couldn't get it. And of course, they're trying to protect investors from volatility. Well, the stock had no choice but to drop. Nothing was buying there. And Friday, today, the orders opened back up, climbs back to above 400, settled around 300, 315 at the end of the day. Now, we all know who the initial players were. You had the hedge funds of Melvin Cap, 0.72, D1, Citron Capital, and Maple Lane actually is a new one I found looking at this today. They were just using puts. They didn't short the stock. They just bought a large variety of put options. They were responsible for a large amount of open interest on the puts on GME. So they took large short positions. I saw some rumors, haven't seen facts on this yet, but there were rumors pointing to that 130 to 140% of the available shares were short, meaning more shares were available were sold. And that was a discrepancy that some people started to notice. Now, many of these have closed for losses already. The short interest actually went down to negative 1%, I believe, on Wednesday, if I'm not mistaken. And so that's another situation. And I'll get to that in a minute, off of this maybe, and onto that in a second, William. But so many have closed their losses, closed for their losses, and some need new cash. Losses are estimated at 19 billion. On the other side, what did we have? Well, we had this forum group, Reddit, called Wall Street Bets. Others too. There were YouTube channels. A gentleman from Massachusetts, who used to work for Mass Mutual, had a YouTube channel where he was a member and sort of promoting this on his YouTube channel also. And these message board members were taking long positions, some hundreds of shares, thousands of shares, some 5 shares, 2 shares, who cares, 3 shares, let me put it in. And they had looked over, the impetus for us is that some people started to know that the stock looked undervalued, but also that there was 120, 130% short interest on the stock. How can that even exist? That has to be covered at some time. So they were building this army of these ideas. Now, was it 2 million or so, 2.5 million or so when this really started to take off? At the close of yesterday, I think it was over 5 million people were signed up and following what's called the subthread, subthread on Reddit as well. Now there's new players in this drama. No one was happy. None of the investors were happy. Robinhood champions itself as, being for the people to allow the retail investor to trade. And then they told the retail investors, you can't trade because of these issues. Same with Webull, an alternative that came out after Robinhood. But they were under fire for halting new buys on Thursday and stated that the cost to accumulate front shares was too high. They also had to turn off the margin, or I'm sorry, turn up the margin. They weren't allowing people to use margin for GME to do other shares of positions. So this angered the investors that originally took to Robinhood as a way for the common person and unexperienced trader to quickly trade stock. More like, let's be honest, since many of them, it's more like gambling than it's investing. You just pick up your phone, you say, oh, there's the hot stock, let me buy 2 shares, and you put your phone away, and that's it. Okay. And also, I believe we saw at least 2 lawsuits filed by investors in the last 2 days as well. There might be more. There's one class action suit. There's another lawsuit filed, I think both against Robinhood, but there might be others too. Now there's talk of finance committees and the SEC looking into the situation, the relationship between Robinhood and the short sellers and the capital investment companies, Robinhood and the capital investment companies, and why this was turned off when it was. Are new regulations coming? Which side or entity might new regulations come? Was it illegal to be short combined from these things 135% of the available shares? Or was it just missed? Did someone just miss it? That's the argument from one side. So the investors over here that are buying and rallying up the stock and say, we're staying in until it goes to the moon, they're saying, wait, isn't it illegal to be short combined more than 100 shares of an available, 100% of an available trading security? And was it illegal in a sense, or was it going to be considered dangerous for people to be following these forums and advice from not only following advice from 1 or 2 people, but the gentleman I mentioned from Mass Mutual that I saw today on the YouTube channel, he's technically a CFA, was recently working for Massachusetts Mutual Insurance as a trader. Did he say anything in any of these videos that might be considered not necessarily illegal, but not in line with what he's licensed to do, even if he's not working for another entity anymore, such as Mass Mutual? You know they're going to get into those questions, and I think there might be things on both ends that come out of this, whether they help or hurt. So what's next? Exactly. This is why this presentation isn't finished in this case. The trading is open again. It's a tug of war. William just pointed out, it said, look at the volume on GME over the last, at a 1-hour chart for the past week. It dried up massively on Thursday and Friday. So there's a tug of war going on, but the volume is declining, especially the last couple hours. In that case, are we going to have investigations? Are they going to follow through with those? Are we going to see regulation, and which side is it going to be? And the reason why I went here, Kipp, with your mention, and why I didn't get to your question directly is because, well, is it time to buy or sell or hold? It's not my place to say. And it is not my place. You've seen what this stock has done over the last 4 days. There is no magic in an option strategy, Kipp, that I can say, hey, with the volatility in the front months up 6,000% and something 8 months out looking further down, normally you'd think that'd be a great position to get into some form of calendar spread where you're selling front month and buying far month. I have no clue what this stock's going to do. It wouldn't surprise me if it goes back down to $4 next week. It wouldn't surprise me if it stays where it is. It wouldn't surprise me if it goes up to 500. I have no direction on this stock. And you know I don't give direction on stocks anyway. Following what I said, today's material is my thoughts based on your questions. Sam says proper position sizing is the key. It was $2 in pandemic in the low, although one guy is up, maybe says he's up 25 million in this case. I saw that too. I think it's 2,700 shares went up to a total value of 55 million. AAL, yeah, there are other stocks. I think I had that on that last slide. BB, BlackBerry was one done earlier, a little bit earlier, and this was just kind of a short squeeze. Bed Bath and Beyond, AMC, we've seen go all over the place. These are mentioned on those Reddit boards as well. And AAL, American Airlines, also in that group also. And so in that situations, that's what we're going to have to consider. What is the outcome? I don't know. What could an investor do when you see a 6,000% increase in the volatility in the near months? I don't know what to tell you. Trade at your own risk. If you trade it, proper position sizing. And I saw a couple gentlemen, talking on different finance channels. They had a gentleman on today who was a trader, an investor, a day trader who had a channel of his own, and he got in late to the Reddit forums, and he started following it just a few days ago because he went into their due diligence, saw, wow, some of the things they're saying, they're making sense. When it was trading, I think this guy said at the 140 mark, that's when he started following Reddit more and getting into it and getting deeper into it. And he said, yeah, I entered in at 140 with less than 1% of his total portfolio value. As Sam says, why would you do that? Because if you lose 100% of it, 90% of it, you don't care. It doesn't hurt the portfolio. That's key. Whether you're doing an options trade in something like this, that we don't know what could happen. Trading could be halted sometime again next week. Trading could be halted for multiple days sometime next week. We don't know. Trade at your own caution, proper position sizing, because no one knows what this is going to do next. There's the cheerleader side over here that's really, they're hunkered down. They say they're staying in. They're staying bullish. Don't sell your shares. We're in. We're going to get more. We're going to drive it up further. Okay, but there's pressure on both sides again. It's the tug of war going back into play. This could easily drop. What's sustaining it other than this buying power that this little army has, this strong army that is banding together? What is it beyond that fundamentally that is keeping the stock up? I don't know. We'll see. Okay. In that case, yeah. Let's see here. So, yeah, Sam says, okay, sorry, he had a bull put on GME, got out when the stock was at 45. It was at 37.44. At that time, nobody knew the stock was, no one knew. Exactly. And okay, William says other comments here. What about the questions about Nancy Pelosi being allowed to trade Tesla calls because she had inside information to the clean energy plan? I don't know. I don't know who looks into that. We saw some of that again. This was related to the pandemic sales, that nothing really came out about it, right? Remember, we saw both a couple Republican and Democrats, William, selling a lot of shares of stock mid-February, right before the decline. And they did investigate them and nothing really happens. And so he says, William goes on, says that's why the Redditors are mad at the establishment. There is an underlying aspect of that. That is very true. If they can do it, why can't we? If they can bend the laws to the advantage, that's why they're really, that the Reddit group and all the sub threads and the talk about it, they're pointing to this. How can you allow a group of short sellers to be short over 100% of the available market for the stock? How is that legal? And if it's not legal, why wasn't it enforced? We beat them if they can bend the rules, why can't we bend the rules? If they can take advantage of these things, why can't we? And if you're going to come down on us, you've got to come down on everyone else. William, that's right. They're mad at the establishment in that case. EXPR was a great example. Express, that's another great example that came out in the last week and a half with this type of short squeeze position. This is just a new type of short squeeze. It came about from a social media group, for lack of a better term. And it's something we saw that built up to the election. The effect of social media, the effect of a group. I don't want to say that type of mentality, but you know what I'm thinking there. If you have people around you that feel the same way you do and feel the same way, and you feel confident that, hey, we're all staying in, we're all doing this, we're all going in, we're not selling, we're doing this, it built and it built and it built. And yeah, who's going to win, the Bulls or the Bears? It's going to be really hard to tell. It's going to be very, very hard to tell. So those are my thoughts on this. Kipp, to answer your question, I'm not touching anything with options. I agree with your friend. He says they've never seen this type of increase implied volatility percentage-wise on one single option or one single area. And that's right. And usually that's when I back away. When I see something I've never seen before, I back away because I don't know what's going to happen, honestly. Am I missing profits? Sure. Am I missing out on some losses here and there? Sure. Did Sam play this well? Sure. Do I actually have friends, Facebook friends and so forth that know what I do, that ask me about it? I had a couple. Do I have Facebook friends that actually have been following the Reddit group and 3 days ago, 5 days ago, started posting screenshots from the Reddit group on their Facebook channels before the move? Yes, I did. And I still didn't do anything. They bought 5 or 6 shares here and there. They did it that way. They were kind of happy. They get an X to go out to dinner or order dinner, takeout 5 or 6 times over the next 2 months as a bonus for what they did. So great on them. If they sold, some people stayed in. But that's our thoughts on that, Kipp, and that's why, I don't give any direct advice. I don't know what's going to happen next. Again, seeing the implied volatility difference If you see that something short term versus something 6 to 8 months out, your first instinct is a good type of calendar spread. But a calendar spread by definition is bullish, bearish, or neutral. A double diagonal is still neutral. Is this neutral? Is this bullish? Is this bearish? Not my place. Not going to say it. I'm not going to do it. Not going to lean towards it. Anyone who's having fun with it, have fun with it. Anyone who's willing to take a chance with it. 1% of your portfolio, proper position sizing. Don't overextend and look for the home run. There are a lot of people who probably lost money the other day on it. Maybe they bought back into average down. And we'll see what comes out of this. Investigations, regulation, we have to see. It's something new. It honestly is. It's something new. And we're going to see how this cascades to the rest of the market. But be guaranteed whatever comes out of it, whatever happens in relation to the online brokers, the capital finance companies behind the online brokers, the hedge funds, regulations to the individual investor, you know that we'll be here on top of it for you to find out all of the information that you can. My wife says if she hears me mention GameStop, short selling, Citadel financing, or anything for the next 3 days, she's just going to not feed me dinner anymore. So that's where we stand with the amount of articles I've been reading and going through in the past 3 days. This presentation is designed to be longer, but I just had the first 5 or 6 slides up in case a question came in today. So Kipp, there we are.